Please, ladies and gentlemen, one more time, I'd like to announce, kindly change your names so that we have the proper identification to your image. And what I asked earlier on is that as you put in your name, also put your organization so that we are able to identify you when you ask questions, as the case is. And I'm glad to announce that this particular event is being live streamed as well on YouTube and some other platforms. This is to enable us to be able to reach as many people who have indicated interest to be part of this particular forum. The A2F, which is the FINA's Access to Financial Services in Nigeria 2020 Survey Report and Dissemination event happening this year, 2021, is one that obviously we have been waiting for, because we know that a finance report every other year is that report which a lot of organizations and a lot of fintechs and interests actually use to obviously, make up some of the decisions and look exactly how they can also build different products and services that is going to benefit their customers. The aim basically is to engage the public by disseminating the survey report, as well as create effective awareness and then drive widespread stakeholder participation and the use of accurate data, as the case is. So these are part of the essence of what we are looking forward to. And what we are also going to be expecting, we include financial inclusion indicators. How much progress have we had in terms of the national financial inclusion targets? And definitely, we're going to obviously explore the different other aspects of our program, which obviously helps us to be able to make things work out fine. And so, ladies and gentlemen, I'm so glad because this event is having a 2-hour period, and we want to be on time. As your moderator and timekeeper, I'm going to do my best to ensure that we wrap up today's event on or before 1 o'clock. As a way of starting up, I would like to quickly announce one more time. Kindly change your name from Aminu Maida to your proper name, and also attach your own office or designation to it so that we can easily identify you. And I'm glad to announce that a lot of my speakers and panelists are in the house already. Mrs. Aisha Ahmad, the Deputy Governor of Financial System Stability of Central Bank of Nigeria. Thank you. Dr. Isaka Olarenwaju, former Director, National Bureau of Statistics. You're welcome. Ashley Emmanuel, the CEO of EFINA, is also in the house. Dr. Oluwatomi Romosele, Research Officer at EFINA, is also in the house. Mr. Sunday Thomas is certainly joined us. We also have our panelists who will be joining us. Mrs. Amina Umar, Head of FIS, ably represented by Dr. Paul Oluipe, a man that I always know and I look forward to engaging. Mr. Musa Jimo of PSMD CBN is represented here also by Mrs. Aisha, Isha Olatinwu. And then we have Mr. Aminu Maida, Executive Director of Technology and Operation NIMS, who obviously is here represented by Beke Nubi. Beke Oluwa is a man that I always look forward to. The engagement is always very interesting. And then I have Mrs. Ronke Kuye, the CEO of SANEF. Congratulations one more time, Madam, for the success of over 500,000 agents. And we're going to be talking about that when we come to the panel session. And Mr. Uzoma Dozie, CEO founder of Sparkle, you want to say big welcome. And certainly Mr. Abubakar Sulaiman, the MD of the One Customer Bank, Sterling Bank, we say big thank you. And Jacqueline Juma, head of DFS of EFINA, is going to be on ground to moderate the session. And definitely we have the closing remark from Ms. Gail. And so at this point in time, I'm made to understand the chairman of board of directors of AFINA is certainly on cue. Is a gentleman who I have the singular privilege of relating with sometime in the past, who has an extensive legal experience across the core areas of commercial activities, including commercial law, banking and finance, taxation, intellectual property, labor, employment, and pensions. For over 10 years, he worked at one of Nigerians and premium law firms, which was the Chief Rotimi Williams Chambers. And today, he is the managing partner of Shegu Akerele Legal Practitioners, a full-fledged service law firm that is based in Lagos, that has been set up since 2008. So at this point in time, to give us the welcome address, I would like to invite the chair, Board of Directors of FINA, Mr. Shegu Akerele. Over to you, sir.
Thank you, Stephen, for that introduction. So distinguished ladies and gentlemen, as always, it's my great pleasure to welcome you to our Access to Finance you for taking the time to join us today. We are very happy to specially recognize key representatives from the British High Commission, from our donors, FCDO and the Gates Foundation, the Central Bank, NICOM, PENCOM, NCC, and AFINA's board, who have continued to actively guide AFINA towards achieving its mission. I'm also pleased to see so many of our stakeholders here today. Now, financial inclusion is an essential tool for reducing poverty and achieving inclusive economic growth. Studies show that when people can access a range of financial services, they are better able to absorb financial shocks, manage risks, and start and expand businesses. The A2F is designed to measure access and uptake of financial services in Nigeria, as well as to identify opportunities to promote financial inclusion in the country. Since 2008, this survey has been conducted nationwide, biannually, and the 2020 survey will be the 7th of its kind. This morning, we will see what progress has been made with financial inclusion in Nigeria. We will briefly share the data, lessons learned, and successes recorded so far. As you will see when you share the data, there are still hurdles to cross and great strides to be attained with financial inclusion. However, AFINA remains confident that a continued collective and concerted effort by both public and private sector stakeholders will help to unlock the prospects in financial inclusion and create an inclusive economy for all, especially the poor. I look forward to the opportunities every A2F presents to us to achieve our financial inclusion targets. I thank you all for making the time to attend today's event, and I hope you will find the session to be useful and productive. Thank you very much.
All right, thank you so very much, Mr. Shegu Akerele, Chair, Board of Directors, AFINA. One of the things I didn't mention earlier on is the fact that Mr. Akerele retains an interest in public service, and as a consequence, he is a trustee of the Eco Charity Foundation for Poverty Alleviation. I mean, a trust set up with a specific objective of bringing about positive financial change in the lives of the ordinary Nigerian. I want to say a big thank you very much, sir, for your presentation. At this point in time, ladies and gentlemen, we're not going to be taking too much of your time. We're going straight to also invite the Deputy Governor of the Central Bank, overseeing Financial System Stability Directorate, a woman who has distinguished herself in no little way. As a matter of fact, she has done so much more well in terms of being a banker. And today, she's overseeing the Financial System Stability Directorate. And right now, we are going to have our presentation being played. Thank you.
Invited guests, distinguished ladies and gentlemen, good morning. I am most delighted to present these brief remarks at the launch of the findings of the much-awaited 2020 Access to Financial Services Survey by Enhancing Financial Innovation and Access, AFINA. Let me begin by acknowledging the great job that EFINA and its partners are doing in supporting financial inclusion initiatives in Nigeria and several other jurisdictions through research, advocacy, and provision of data on access to financial services. Insights provided from the biennial Access to Financial Services Survey Report, which have been disseminated by EFINA since 2008, have been critical input for policymakers in designing policies to further financial inclusion. Well done, EFINA, for sustaining this worthy cause for over a decade. Financial inclusion has become a global development initiative. It is critical to bridge income inequality, combat poverty, and preserve social harmony. The Central Bank of Nigeria has accordingly been at the forefront of efforts to drive financial inclusion in Nigeria by championing the development and implementation of Nigeria's National Financial Inclusion Strategy. Since when the strategy was launched, millions of Nigerians have been included in the formal financial system. This has been achieved through collective efforts of various agencies and multiple stakeholders under the National Financial Inclusion Strategy governance framework. Nigeria adopted a multi-pronged strategy focusing on removing the barriers to financial access, providing critical payment infrastructure, and introducing regulatory guidelines to encourage innovation and attract new market participants. Some of these policies implemented include the introduction of the tiered KYC framework to reduce the burden for account opening for lower tier customers, the establishment of the National Financial Literacy and Consumer Protection Framework, the issuance of regulatory guidelines for licensing new participants in the payment space, such as mobile money companies, payment solution service providers, payment service banks, etc. The expansion of the agent networks via the Shared Agent Network Facility SANEF to increase financial access points, and the launch of the collateral registry, etc. These initiatives have not only helped to reduce exclusion rates, they've transformed the payment system. Despite progress to date, though, I believe we still have work to do. Gaps in financial access remain, especially with women, the northern region, and the rural areas. We need to focus efforts on deploying solutions that target these excluded groups. Last year was indeed very challenging for all economies due to the COVID-19 pandemic. While many households and businesses in Nigeria faced financial setbacks as a result of the pandemic, we saw the importance of digital financial services in helping them cope and remain resilient. For example, data from NIBS and SANEF shows increased use of digital payments and agents networks during the pandemic. I hope that we can build on this momentum to drive financial inclusion across board. As part of efforts to bridge the gap in some of the excluded segments, the CBN launched the Framework for Advancing Women's Financial Inclusion in Nigeria in 2020. This was in response to the fact that women face greater levels of financial inclusion than men, despite increased efforts to tackle this problem. Inequality in account ownership persists, as the gender gap in developing economies remained largely unchanged between 2011 and 2017. In Nigeria, the gap is particularly pronounced in rural areas and has only decreased slightly since EFINA started measuring financial inclusion in 2008. While tackling the barriers and constraints that hinder women from taking up formal financial services is paramount, it is also important to address gender social norms that play a significant role in limiting women's economic empowerment. The Framework for Advancing Women's Financial Inclusion in Nigeria, therefore, takes a holistic approach to resolving the problems of female financial exclusion by highlighting 8 strategic imperatives some of which include implementing measures to support account opening, expanding financial and digital literacy programs for low-income women, mandating the collection of gender disaggregated data, creating an enabling environment, integrating a gender lens into the financial inclusion efforts, building a culture of women's leadership in key financial institutions and agencies, amongst others. The CBN is leading the industry to implement the framework, which we expect to lead to significant increase in women's financial inclusion in Nigeria. Accordingly, we have championed 8 communities of practice made up of relevant government and industry stakeholders working together to execute the 8 strategic imperatives under the framework. Building a more inclusive financial system will have transformative effects for society as more citizens will be better equipped to manage risks, cope with shocks, and fund critical household expenditures. Concerted efforts from key stakeholders is needed to close the gaps in financial access so that together we can achieve greater results in economic and social development. We eagerly await the findings of the 2020 Access to Financial Services Survey to enable us fine-tune strategies towards meeting the financial inclusion target for the country for the overall benefit of the economy and its citizens. Thank you very much for your attention.
And then we have the next presentation, which is on the EFINA Access to Financial Services in Nigeria 2020 survey. That itself is the next one we are obviously going to be taking. And that is very key because this is partly one of the reasons why we are here. And the Chief Executive Officer of EFINA, Ashley Emmanuel, will be supported by our Research Officer, Oluwatomi Eramosale, to actually give us this presentation. Ashley, over to you.
All right, thank you very much, Stephen. And we'll aim to hear from Dr. Olariwaju after this presentation. So I'll, Stephen, could you please take down that slide and I'll project our A2F key findings slide. And while you're doing that, I'll also say a remote sincere thank you to the DG, who wasn't able to join live, but was kind enough to record and send some remarks ahead of time. She's been a strong partner in the financial inclusion drive for a long time, and we're quite pleased that she was able to join us remotely today. All right, so Stephen, could you please confirm that you can see my slides?
I can see your slide, Ashley, I can.
Thank you. So today I'm with our research officer, Tomi Oromosele, and we are going to be sharing the key findings from the A2F 2020 survey, the EFINA Access to Financial Services in Nigeria 2020 survey. The survey data is very rich. Today we will share some of the key takeaways, but there's much more value that we'll be able to continue to analyze and disseminate along with our partners over the coming months. I'll share a little bit of background. The survey, as has been mentioned by our chairman, has been running since 2008 and really serves a few very key purposes. One is to measure financial inclusion in Nigeria. Before EFINA started running this survey, there really wasn't a credible data source about what financial services Nigerians were using, how they were managing their financial lives, particularly for those who aren't using regulated financial services such as banks. So the A2F captures a lot of data about Nigerians' financial behaviors, the solutions that they're using to meet their financial needs, and really importantly, is an important tool to to identify actions that various stakeholders can take in order to continue to drive financial inclusion. The survey, we partner with the National Bureau of Statistics to design the sample for the survey to ensure that it's nationally representative. And we conducted about 28,000 interviews for the main survey, as well as some booster samples for this A2F 2020 survey. As we've done we have consistent methodology every time we measure so that the results can be compared year over year. We can analyze trends. As we've done in past years, we translate the survey into different local languages. And then once we've received the results, the National Bureau of Statistics supports the weighting of the data and then signs off to confirm that the results are valid and represent what's actually happening in the Nigerian market. So at this point, I'll hand over to my colleague Tomi, our research officer, to share a little bit more context.
Thanks, Ashley. So we'll go straight into the data and the findings from the research. So as we mentioned, the NBS has weighted this data and currently places the Nigerian adult population at 106 million. Of this week, we also see that we have a large rural population, large youth population, and interestingly, about 20 million adult Nigerians have no formal education. We also have a high dependent population, and these statistics are very important because over time we've seen that demographics is one of the biggest descriptors of financial inclusion. And so we'll probably, as we go along, see how these indicators play in the financial inclusion rates that we have at the moment. Also, we'll look at the context in which we are, measuring and tracking financial inclusion, and also we're going to look at the economy. And we are all aware that in the past, 2 years, we measured this data between 2018 and 2020, and all economies around the world have been struggling or trying to recover from the pandemic, and we've also had our fair share. We've had declining GDP growth rates. Value of our currency has also fallen, drop in oil revenue, inflation is on the high. Yes, in 2021, we're seeing some progress, but for the period in which we're measuring this information between 2018 and 2020, it's important to note that the context is one in which the economy was strained, and also livelihoods as well. The pressure from inflation and also unemployment has also impacted on the purchasing power of the Nigerian population. So some further demographics on the adult population. We see that although the pandemic is hitting hard on livelihoods, Nigerians, we see some kind of resilience amongst Nigerians, as we're seeing some increase in the number of people who are starting their own businesses. But which I just mentioned, an increase in unemployment rate, and we've seen a 1% increase in the number of people who are employed in the formal sector. And we see more people going into farming, and also more people going into services. When we look into business owners, because obviously when we look at the MSME space, it's one that requires a lot of attention because of its potential for growth and development. We see that compared to 2018, currently we have 49 million business owners in Nigeria, and this is a significant number. It's up by 5 million from 2018. This includes about 37 million individual entrepreneurs and about 10 million business owners who are employing about 33.2 million individuals. So this is, a segment of the population that has high potential for employability, for improved livelihoods, and we are keen on looking at, analyzing this information around these demographics because of its implication on livelihoods as well. Okay, as I mentioned, we're still dealing with COVID and trying to find our way out of this, but the data shows that about 80% of the adult population, about 86 million people, have experienced one negative effect from COVID. Over 60% of the population at least had a reduction in their income during this period. And obviously this has implications for financial inclusion. So yes, we're here to look at the financial inclusion numbers. But before we go into that, we would like to just provide some background and some context around what's driving the landscape of financial services in Nigeria at the moment. So what we have on our slide, is shows us the banked population, and we can see an increase in the banked population from 2018 to 2020. It's about currently almost half of the population is banked, and that's important because these people have access to at least a digital store account, and they can do transfers, and they could, improve their lives using these channels. We also see that savings, payments, remittances, and also the use of banking agents. These are the mechanisms that are actually driving, or the channels that are actually driving the increase in the bank population at the moment. So banking agents up by 16% in the past 2 years, and we hope that this would have implication for financial inclusion in rural areas as we continue to push for that. But obviously, there still remain barriers to uptake of banking services or bank accounts, and we see that the typical reasons that we've always had issues around perception, people saying, I prefer cash, I do not trust the financial system, or just no reason at all, as well as access. Access is a key factor. People say banks are too far from where I live, or it costs me too much to reach a bank branch. So, and then there's the economic exclusion as well, the fact that people have little or irregular income. These three barriers continue to drive the reason why people are not taking up bank accounts as much as we want them to. Beyond the banking space, we would also look at the non-banking space. So these are formal financial institutions that are non-bank. We see that the percentage of the adult population that use these providers has dropped slightly in the past 2 years, and this drop likely has come from drop in people who have used microfinance bank. I think one reason is, during the pandemic, there's the issue around social interactions, and a lot of microfinance operation use the social network and the group methodology. So we see a drop in the percentage of people who are using microfinance banks, but we also saw a 1% drop in people who are formally employed. So we also see that pension has dropped a little bit, and to be so these are some of the sections that are actually driving down the numbers, but then financial service agents still pushing up the numbers and ensuring that we still have significant numbers. Just to mention that we understand that some segments of the financial system, like capital markets, not captured here, but we have, the data contains that information, and as we analyze this going forward, we would also provide more insight on those segments as well. Also, when we look at the barriers and why people are not taking up non-bank services like we would want to, remember that these non-bank financial services actually speak to the depth of financial inclusion. So how much are people able to do beyond just banking? We see that awareness remains a major issue, a major barrier when you look across micro pension, micro insurance, mobile money. And so we need to continue the advocacy efforts, continue the financial capability or financial literacy efforts that we're making to ensure that people are aware of this product. For instance, when we look at why people are not insured, we see people who say, I haven't thought about it yet, I'm not sure about the benefits, lack of information. So it goes also to speak about, to providers, what are we doing in the market to ensure that people are aware and they're informed about this product. That's one level. On the other hand, is also the ability to use the product correctly. So these are initiatives that we need to start to push ahead. Third, we will look at the informal space because this is also one segment that has continuously, remained strong, and Nigerians continue to use the informal financial service providers to meet their financial needs. And this is up from 30% in 2018 to 33% in 2020. And we see savings groups, savings thrift, village association and cooperatives driving this uptake. So the question will be, what's actually, what is it about these mechanisms that are, driving or encouraging people to take them up? I think one thing we see in the data is the ease of access and also the flexibility also. So, I mean, formal providers should think about how can we mimic this kind of, operational mechanisms to ensure that, people are, taking up products as much as we want them to. When we look at the broader landscape, just to compare where we were in 2018 and 2020, we see that more people now have access to transaction accounts, and that will capture individuals who have access to or use formal financial accounts, whether with a commercial bank or microfinance bank or mobile money accounts. So accounts that help people to transfer, make payments, and all of that. Savings is also on the high, which is very good. We see Nigerians are saving. That has consistently increased over the years. Remittances is also increased slightly, and that's I should also mention that savings here includes people who are saving at home, saving with family and friends. Any form of savings is captured here. Credits, unfortunately, we're seeing a decrease in credit, particularly at this time when people will need a lot of support in form of loans to support their businesses, meet their, we just saw what the pandemic has done and how much livelihoods have been affected, but then we see a decrease in credit. And so that's one area that we need to look into as a sector and try to fill in the gaps. Before we also look at the financial inclusion numbers, Ashley mentioned earlier on that we've made some improvements to the research, and we've actually made two improvements. One is with the financial needs framework, and the other is with the financial health measurement. So with the financial needs framework, we've worked with our partners, FIMAC Trust, to design the framework for this survey, and it basically helps us to understand how well Nigerians or the Nigerian adult population are able to meet their needs using financial services or financial devices. So there are four financial needs or financial use cases that we typically look at. First one is transfer of value, which looks at ability or the need for people to send money, receive money, whether through cash or digitally. We also see liquidity, the ability for people to be able to meet their expenses within a certain income cycle. So, and also we see meeting goals. So we all have life goals that we want to meet at various stages in our life. So the ability to be able to have financial service help us achieve those goals. And then finally, resilience. So how do we cope? How do people cope when they face shocks? Just an example to help us understand these use cases. One case would be when a child is sick, you would have to make payments. You would have to either do that through cash or digitally. You can also, maybe if you have a medical insurance financial service, you can use your medical insurance to actually meet that need. But beyond these formal ways or more financial ways, sometimes in our society, you could rely on relatives, to help you meet these financial needs. So these are social mechanisms. And then you could also go take out a loan to meet this need. So what I'm trying to point out here is that in defining this financial needs framework and in addressing the use cases, we're looking beyond financial services as the way to meet financial needs. So people express their financial needs in different ways, and they use financial devices to meet those needs. But those financial devices could involve physical mechanisms as well as social mechanisms. For instance, the relatives on this slide, which I spoke to earlier, will be a social mechanism, but then it is effectively meeting, financial needs in some cases. So we are looking at how the people meet their needs so that we understand where we can come in and how the providers can actually meet people's needs. So quickly, we'll look at the first use case, which is transfer of value, and we see that 100% of all adults have actually expressed that they have and have at least one of these transfer of value needs, at least payment, and 100% of us are paying in cash. Good news is about a quarter now are paying digitally as well. But then just to point out that these three channels, payments, receipts of income, and then remittances, seem to be the digital drivers that we need to tick for us to drive digital uptake in terms of helping people to make payments digitally. So it's also important to note that it's 6% of people who are receiving income, and 13% are receiving that income digitally. So we need to drive up uptake across these three buckets. Like I mentioned, yes, we are doing this. Cash remains king, and even when we look at the digital payments, oftentimes there's still a cash link to that. But we see that, in the past 2 years, we have significant improvement in digitization and also the opportunity for digitization. We see increase in mobile phone ownership, and we also see increased access to digital financial service users significantly. Currently, 28% of the adult population are active digital financial service users, and that is up from 16% in 2018, and that is a significant progress that I think we should celebrate as in the sector. The next need quickly is liquidity. So this is ability for people to balance their income and their expense. And we've basically asked, how many times in the last 12 months have you run out of money, to meet your basic needs? 72% of the adult population have experienced some kind of liquidity needs. So in other words, they've not been able to ensure that their income was able to to match their expense in a particular month. And that's some distress. But for those people who have experienced it more than once in 12 months, we tag that as severe distress. So 60% of adult Nigerians have experienced severe distress in the fact that for more than 1 month in the past year, they have not been able to match their income and their expense. But again, this is the point we're driving. How do people actually meet, this need? How do they actually fulfill this need of managing their liquidity? A quarter of them are using financial mechanisms, but then we see a third, about 1/3 of Nigerians are using fiscal and social mechanisms, and that's why we say, at this point, maybe we have to recognize that, in the Nigerian society today, physical and social mechanisms like selling of assets, borrowing from family and friends, receiving gifts or contributions from family and friends, may be effective mechanisms to also address financial needs. And we will see this recurring as we go across. Meeting goals, these could be goals, just lifelong goals, paying for children's school fees, buying a house, planning for retirement. We see 73% of adult Nigerians have a goal that they are trying to achieve. Now, 27% do not have a goal, and I'm not sure what that speaks to, but it's good that we have 73% of adult Nigerians who are actually working towards a goal, and so there is a need that should be met. And interestingly, we see that the biggest goals involves business and investing in land, apartments, or buildings. So again, when we see 49 million business owners, and Nigerians are saying the biggest thing we think we're working towards is our business, it shows the market opportunity for providers to come in and fulfill meet that need. But then when we also look at how are they currently addressing those needs, unfortunately we see about 1/4 of these people say they have done nothing in the past 12 months. So it definitely tells us that those needs have not been, there's been no progress in achieving those needs. But for those who are even working towards the needs, we see that 40% again are using non-financial mechanisms to tackle, to meet these goals or to work towards meeting these goals, and about 23% are using some sort of savings. Lastly, we will look at resilience, particularly in the Nigeria or in the world today. This is more important because we've said that 86 million Nigerians faced financial shock. Were negatively impacted by COVID, and we're seeing here that about 60% face financial shocks. But very, very key here is the fact that economic shocks related to price increases, loss of job, failure of businesses, this is, as well as health-related shocks. The economic shocks seem to be the dominant shock experienced by Nigerians. And we need, the question we need to ask ourselves is, do we have appropriate products in the market to help Nigerians cope with these specific shocks? Yes, we do have, in past years now, very good. We do have products that speak to medical insurance or health insurance, but we can see that what is actually affecting Nigerians are economic-related shocks. Are there products, formal products today that are currently helping Nigerians meet those needs? I think that's the question we need to ask, or help design our products to address those needs. So again, when we look at how are they dealing with resilience or the shocks, we see fiscal mechanism come into play, we see social mechanisms come into play, and I think that's the point we're trying to make, that we cannot rule out these mechanisms, whether it's in how we set our targets going forward. Just to also point out that, but specifically in the Northwest and Northeast, at least 1/3 of the population are actually recovering from shocks or balancing their liquidity using these fiscal and coping mechanisms. So when we say, oh, these people are excluded and they're doing nothing, that's also not the case. They do have some mechanisms that are working. And is it worth having a conversation around how do we incorporate, these mechanisms that seem to be effective in terms of how we define their exclusion or their inclusion? Okay, and lastly, we'll look at financial health as one of the measures we've also taken to improve this sector. We need to improve, one of the attempts we've made to improve the survey itself. And financial health basically helps us to look at, beyond the fact that you're financially included, how financially healthy are you? How well are you able to take control of your financial life and use it as a tool to improve your well-being? So as when we look at the Nigerian adult population, we see that Nigerians are scoring relatively high in the save score and the plan score. So Nigerians are saving well, they are planning well. However, we see they're scoring low in the spend score and the ability to manage risk score. So this is similar to what we've seen in the financial needs as well. It confirms that the fact that more Nigerians are not able to balance their income and their expenses. So obviously low income or irregular income, so they're running out of money, and also they don't have enough to help them cope with shocks as they face the shock. So what we see is that 27% of adult Nigerians are financially healthy. About 40% are financially coping, and about 1/3 are financially vulnerable. We then also look at financial capability of Nigerians, because again, it's good to have access to financial services, but I mean, are people able to make the right choice? Are people knowledgeable enough to ensure that they're using financial services to improve the way it should be used to improve their well-being? And we see that almost a third of Nigerians score low on the knowledge score, and that is quite key, because I mean, if people are not, and I think we saw that when we asked the question about why low uptake of the non-formal product. So there is a lot that we need to do around the issue of knowledge and building the financial capability of Nigerians. For the sake of time, I'm going to just run through this. So lastly, we also looked at, the correlation between DFS and financial capability levels. And we see that even though the national, amongst adult Nigerians, DFS uptake is about 30%, 29-30%. But when we look at people who are highly financially capable, who have high financial capability, we see that DFS uptake increases up to 51%. So as we try to improve or push this, agenda for increased use of DFS, we should also try to look at increased financial capability as a route to doing that as well, because the more financially capable people are, the more they're likely to take up digital financial services. So with this context, I believe we can go through the financial inclusion numbers. So I'll hand over to Ashley.
Thanks a lot, Tomei. Well done. So I know that we've been sharing a lot of graphs. We just have one more set that we wanted to share. And I'll mention as we jump into the next section that we'll have some panel discussion, as well as try to pick up a few questions and answers at the end of this session. So if anybody has any questions or comments as we're presenting, please put them into the Q&A box or the chat, and we'll reply online or in the next section of our agenda. So those who are familiar with prior A2F surveys will be familiar with the way that we create a measure of financial inclusion. We use something that we call the financial access strand. And basically what we do is we break down categories into the financially included, this green box at the top left, versus the financially excluded. So the excluded don't use any financial products or services, either regulated or informal services. However, they may be saving money under a mattress or at home. They may be borrowing from family or friends, but they're not using any group or provider to do that. But within the included group, we also break down into some really important categories. So we distinguish between what we call formal or federally regulated financial services, like banks, microfinance banks, pension, etc., and the informal or unregulated financial services, like the savings groups, cooperatives. And then within the formally served, we also break down a little bit further between banked and other types of providers. So here's one of the key data points that we look at every year, and this is our access strand for 2020. What I'll highlight for those who aren't familiar with this view is that this presentation shows mutually exclusive strands. So we start from the left and we say how many Nigerians are banked. And as Tomei mentioned, it's about 45% of adults who are banked now. Then we ask, okay, how many adults are not banked but are using some other formal financial service, like a microfinance bank or maybe a pension account or non-bank mobile money, which is that yellow formal other category, which this year is 5.7% of Nigerian adults. And added together, we see that now we've surpassed the halfway mark. So just over half, or 50.5% of Nigerian adults now are using some kind of formal or regulated financial service. But then when we look at those who are not, we see that 13.6% of adults are only using informal or unregulated financial services, such as the savings groups, village associations, cooperatives, savings collectors, etc. And then the last category on the right, this red box, is the Nigerians who remain completely financially excluded. And in 2020, that number was 35.9%. And those are adults, as I mentioned, who don't use any regulated or unregulated financial services. So what we see is that we still have more than 1 in 3 Nigerian adults financially excluded in 2020. This is another view just to show that whereas I displayed a mutually exclusive view of financial access, there are many adults who use multiple categories of financial services. As Tomi mentioned, when people are trying to meet their needs, they currently rely on really a variety of financial services. And what we see is that even though the number of banked adults increased in 2020, so did the number of adults who are using informal or unregulated financial services, which really indicates that the banks and other formal providers are not meeting all of the needs that Nigerians have. So here we can see the trend since IFINA started measuring in 2008. So the top row on the slide here is the newest data for 2020, and the lowest row is the 2008 data. So what we can see in terms of trend is that we still have this same very incremental growth in financial inclusion. So we see that actually for the first time we've kind of seen a jump, the first time in recent years, seen a jump in formal inclusion, as I mentioned, is now past the 50% mark. And we've seen that continued growth in banking that we've seen year over year at that same incremental pace. We've also seen a slight decrease in financial exclusion, but this progress is not fast enough for us to have met the 2020 financial inclusion targets, which we'll talk about in a minute. Looking at Nigeria compared to other countries, so Nigeria is the third row here with the little red box around it. We see that Nigeria is sort of an anomaly when we compare across sub-Saharan Africa, because while we have a relatively high proportion of banked adults, at the same time, we still have one of the highest rates of financial exclusion as well. So what we see when we look at comparator countries across sub-Saharan Africa is that many of them, particularly the markets with less than 50% banked, many of them have much wider yellow boxes, and those are typically driven by non-bank mobile money services. And that's what's really helped to drive down the exclusion rates in many of those other countries. I will say that it will be interesting to watch over time what happens with the banked figures, because one thing that we've seen across many markets is that not after non-bank mobile money services really expand the reach of formal financial services, often then we also see growth in banking, as banks are able to now ride on those rails and provide more value-added services like credit to the mobile money customers. So looking at the financial access now by some different categories, while we see this continued incremental growth at a national scale, unfortunately, we see that some of these access gaps still continue to persist. So we're really seeing the same story that we see year over year every time we measure financial access. One of the gaps which the DG spoke about in her remarks is the gender gap in financial access. And while the gender gap has narrowed a little bit since we measured in 2018, that gender gap still persists. And it's really my hope that in the next couple of years, once the industry has started to implement this framework for advancing women's financial inclusion, that we'll be able to see more progress in closing that gender gap. This year in our survey, we did a booster sample of young adults, or teenagers really, 15 to 17-year-olds. We'll present a separate report on that sample, so we don't have time to cover all of the detail here. But just wanted to highlight that really the majority of people in that age group are financially excluded. I think it's also important to note that there are 13 million of them. So there's a very large demographic that will be adults in the next few years. We need to think about, many of them do have financial needs, many of them are transacting, at a minimum making payments for things. We need to start thinking about how do we bring them into the system. Looking at the breakdown within adults, we see the same story that we've seen year over year, which is that the youngest adults, those between 18 and 25 years, continue to be the most financially excluded. So we need to think about that demographic as well. And we see that, and this is something we've seen over time as well, financial inclusion is really strongly correlated with levels of education. More than 2/3 of Nigerians who've completed secondary education or higher are banked, whereas we see a very different level for those with lower levels of education. So we need to think about, hopefully over time, levels of education will increase in Nigeria, but until then, how can we make services more accessible for those who don't have those higher levels of education? Looking by sector, we see that the 8 million or so adults employed in the formal sector are nearly completely banked. So that market is saturated. Business owners and those employed in the informal sector, slightly over half banked for each of those categories. We see really much higher rates of exclusion for farmers and people who say that they're dependents. So those are some, and there are many, if you see the numbers, there are many adults who fall into those groups, so we need to think about addressing them. And as we've seen, I mentioned some of these gaps have persisted. As we've seen year over year, there still continues to be a very large gap between urban and rural, with only about 1/3 of rural adults being banked compared to about 2/3 of urban adults, although we've seen growth in both segments. And one thing that we did for the first time in the A2F survey is that we also, when we were conducting interviews, so we sent people out to all corners of Nigeria to interview Nigerians, knock on doors to collect this data. And as we were doing this, we also captured, are there financial access points within those communities where we're conducting the research? So we're able to now do a little bit more analysis about linking financial access points to the demand side interview data. And not surprisingly, we see that not very many of the rural communities have access points. Of those that do, though, the most common access points we found were financial service agents. So I think that's a really important story. And then one of the other key views that we always look at when we measure financial access is by different regions in the country. So this was sort of interesting, where we've year over year have always seen that the Northwest and Northeast zones are most likely to be financially excluded in Nigeria. This year, though, is the first time that we've really seen those Northeast and Northwest kind of pull apart to the extent that they have in this measure. So whereas we're continuing to see more progress toward financial inclusion in the Northeast zone, although there's still half of adults are completely excluded, in the Northwest, we've actually seen some regression. And we see that the Northwest has a much bigger population. When we looked at the demographics, there are now a higher percentage of adults there are in the youngest age group. A very high percentage, about 1/3, are dependents, as in they rely on somebody else for their primary source of income. And those tend to be very excluded groups. So that's an area that we'll continue to dig a little bit deeper in and really need to have a lot of engagement with stakeholders around what needs to happen in the Northwest in particular. And one other thing that I'll highlight here is that when we think about how to reach unbanked or excluded groups, the DG in her remarks spoke about one of the initiatives the CBN had undertaken to promote financial inclusion is what's called tiered KYC. Basically, regulation that allows people without any formal identity documents or proof of address to open a low value bank account. And what we see in the data is that it's really important to retain access to some of those accounts. And we're hearing that some banks are not really in practice offering tier 1 accounts as much, but it's important to make sure that there are some providers in the market who are still offering those tier 1 accounts, because really almost 3 out of 4 unbanked adults don't have the documents today that would be required to open what we call the tier 3 or the largest value bank accounts. So we just have a few more slides. We'll jump quickly to the looking at the National Financial Inclusion Strategy targets. So the central bank in 2012 had published a national financial inclusion strategy, process which Afina had supported. And that strategy set targets through the year 2020 along multiple different categories. And really the headline targets were reducing financial exclusion to 2020 or to 20%, or conversely, you could state that as increasing financial inclusion to 80%. As well as increasing the percentage of adults who use formal or regulated financial services to 70% by the year 2020. And what we see in the data here, and the 2020 values are in the last black column on the right here. Although we've seen growth over time, and in particular, we've seen really steady growth in payments, formal payments. We still have fallen short of those national financial inclusion strategy targets because our progress has been too slow. So we really need to think about how do we accelerate. Very briefly, I won't talk through all of the data on this slide. By the way, these slides will be available on our website following the event. So anybody who's interested can look into them in more detail. But basically, this is a short snapshot of the financially excluded. And we see that of those 38 million excluded adults, 4 out of 10 or 2 out of 5 live in the Northwest. So we really need to think about the Northwest. They tend to be rural areas. They tend to have lower levels of education. But interestingly, many of them either own or are able to access a mobile phone. So we really do see opportunities for increased reach via digital financial services. So to summarize, although we had a difficult year with COVID, and we've measured, we have more data actually about the impact of COVID in this survey, and we've seen a challenging economy. We have seen some continued growth in financial inclusion, which is good. However, as we've seen, we haven't met those national financial inclusion strategy targets. If we continue at the current pace, they won't be met until around 2030. So we really see the need, there's quite an urgent need to accelerate our progress toward those. Part of what we need to think about is those gaps I mentioned that have persisted year over year. If we don't meet the needs of women, Northern Nigerians, if we don't reach rural areas more effectively, we won't meet those national targets. However, we saw some bright spots in this data, which really gives us cause to hope that there's some really some strong opportunities for accelerating that growth in future years. So we see that agents, as Tomi mentioned, use of financial service agents has really grown. We saw that use of digital financial services has really grown. We saw growth in banking, and more people are using their bank accounts and using them for more advanced functions. So we see an opportunity to really build on this. And that will be important, as we mentioned, the second to last bullet here, to really address some of the critical imperatives we see in the relatively low rates of financial health of our population. The last slide I want to share in terms of data is that we a partner called World Data Lab had done some modeling using Athena A2F data year over year, as well as some other data sources, and looked at what could the future look like in terms of financial inclusion under different scenarios. The black lines on this graph show the anticipated trajectory for Nigeria. The dotted line is current status, and the next black line shows given our current growth rate in mobile money. But if we look at some other countries, neighboring countries, and how they've been able to accelerate financial inclusion through mobile money, if we apply those same trajectories to Nigeria, what we see are some of the other potential curves. So the fastest growing curve would be if we follow a similar path to what was observed in Ghana, which is that yellow curve. If we see this growth rate in mobile money, then we anticipate that the access and use of financial services can really grow much faster, and we can meet our national financial inclusion targets about twice as fast. So we'll pause there in terms of the data. I know at Athena we love data and charts, but we know that our stakeholders can only absorb so much at once. As I mentioned, these key findings will be available on our website. And actually, I'll jump to this slide. And there's a lot more richness in the data. So if you would like to see more analysis on another topic, the data is also available to stakeholders. So if you want to actually access the raw data and analyze it yourself, please reach out to us. The contact information is here. We'll put it in the chat box as well. I just also wanted to highlight, as we may have mentioned, that this year, something that's special that we've done in the survey is it conducted a deep dive version of the survey in Kaduna State, which is the first time we've ever had data representative at the local government area level. And we'll be launching that in the next month, and would invite you all to join us again for that. So I'll close by just acknowledging and thanking the many different partners who contributed to the success of this survey. The delivery partners, MBS, Ipsos, Finmark Trust, who's another member of the Financial Sector Deepening Network, along with Athena, who supported the technical delivery. Our funding, our donors, UK Aid for the main survey, and the Gates Foundation for the Kaduna State Deep Dive. Many different partners, many of whom are on this call, actually consulted with us on the methodology and really have contributed greatly to the value of the survey. And importantly, I really want to thank all of the respondents who are out there who sat down for an hour to answer very personal questions about their financial lives so that we could have this rich data. So thanks very much. I'll turn back over to you, Stephen, and then we'll be picking up any questions in the chat or later on. Thank you.
All right, thank you so very much, Ashley. That has been a wonderful presentation. For me, one of the things that came up to my mind has to do with the key findings. And certainly all of the processes that Athena actually put in place to ensure that all of this is actually what we see it as. It's quite commendable. And I imagine as the culture is, these reports are going to be made available, and that itself is going to be what we are obviously going to gain. All right. So right now, we've had one or two technical hitches here. We're going to have to hold on with Dr. Larry Waju. And then I understand that the commissioner is still on call. So as soon as he joins us, because we are pressed for time, I want to quickly announce also that Athena is going to make this available. These reports are reports, the A2F survey reports are reports that we focus majorly on, especially for us in this industry. And then you can be rest assured that the partnership with the CBN, as well as the National Bureau of Statistics, is quite commendable. And then we are seeing the 2020 edition, which is being launched today. Well, without further ado, we're going to be going into the panel session. And so what will happen afterwards is that we will obviously have to invite the other two presenters as soon as they join us. Unfortunately, sometimes these things happen. And so we have to be able to move on. The panel session, obviously, is going to be a very, very robust affair, and it's going to be moderated by Jacqueline Juma. She is the head of DFS at Athena. The panelists are made up of experts in this industry. They themselves are very much qualified to engage us in all of this discussion. But without going in any particular order, this panel also we have the Q&A session all integrated into it. So delegates, I'm making this announcement right now. Please, you have every opportunity to ask your questions. Please send in your questions in the Q&A box. You will see the box on your lower screen. Please send all questions in. And please also ensure that your name and your organization is definitely going to be also included. And we will definitely see exactly how that can roll up. So ladies and gentlemen, first and foremost, I would like to certainly recognize Mrs. Amina Umar, head of the Financial Inclusion Secretariat, who is ably represented here by Dr. Paul Iluikwe. Dr. Paul is a man that I've always engaged with at several events, and I'm glad that he's here to do justice to this particular engagement. I also understand Mr. Musa Jimov of the PSMDs at the CBN is ably represented also by Mrs. Aisha Issa Olatinwo. They are going to obviously be engaging us, especially from the regulators angle. I have also Mr. Aminu Maida, Executive Director of Technology and Operation of NIMS, as a matter of fact, who is ably represented here by Mr. Beke Nubi, and BVN has become a word that we're quite synonymous with, and that itself we are going to be getting much more expatiated here today. And now we have next a woman that I hold in very high regard. She's the Chief Executive Officer of Shared Agent Network Expansion Facilities Limited, SANEF. And I want to say big congratulations to them because they were able to reach the 500,000 agents all across the 6 geopolitical zone. We're going to be hearing more of that detail coming up. And certainly we have a banker and a tech investor who is also a financial inclusion advocate. He's the CEO and founder of Sparkle, a financial technology community and an ecosystem. And that is the person of Mr. Uzoma Dozier. And certainly we also have Mr. Abubakar Sulaiman, the MD CEO of the World Customer Bank, Sterling Bank, a man who is so very passionate about so many things that is committed to. And then that priority in terms of sector actually been focused on what we call the heart of Sterling: health, agriculture, education, renewable energy, and transportation. And so, ladies and gentlemen, this panel session is going to be up for contribution, but make sure you are able to please put out your questions and let's have your organization and your name so that we can have this totally grabbed. And if your name is not reflected on the screen, please kindly change it to the right name so that we grab the proper one, because this whole forum is being recorded. At this point in time, I'm going to be handing over to the moderator, who is the person of Jacqueline Juma. She's going to be handling this session. Jacqueline, over to you.
Thank you, Stephen. I hope you can hear me loud and clear.
Yes, I can hear you loud and clear.
Thank you. Good afternoon, distinguished panelists. Good morning and good afternoon to all participants across the globe. We'll spend the next couple of minutes, probably 45 minutes, engaging in conversations to chart the way forward for financial inclusion in Nigeria, following the interesting insights shared by Ashley and Tommy today. I would like to welcome our panelists to begin by each taking a minute or so to share thoughts, aha moments, comments, following that elaborate presentation, and to also kindly share what they think should be prioritized going forward as Nigeria charts on in terms of financial inclusion. So I'll welcome us to each take a minute and very quickly just call upon the names of our panelists to share this as our introduction. I'll start off with Mr. Paul. Over to you, Mr. Paul.
Good afternoon, everyone. My name is Paul Oligbe. Associate Head, Financial Inclusion Secretariat, representing Hajia Amina Umar, the head of the Financial Inclusion Secretariat. It's good to be here. Thank you very much.
Mr. Paul, I would like you to say, to comment on the shared presentations today. Any insights that stood out for you? Apart from that, what do you think should be prioritized as an industry as we chart forward in terms of financial inclusion?
for me, I was actually going to maybe just comment that remittances moved from 23% to 25%, just a 3% inch up. And basically, even from CBN here and or other places across the country wide, we've been trying to encourage remittances because those would enable us, try and scale up GDP and also increase consumption, a whole lot of other factors, or even stimulate entrepreneurship in the country. So I don't know what strands of remittances you actually looked at, whether these were international or they were domestic remittances or whatsoever. So it might have been good to throw more light on it. Also, there were, I was even kind of also surprised or encouraged that was it savings that moved from 22% to 27%. I don't know if it was savings or credit. I think I've forgotten what it was on the screen, but that was quite good because we've been thinking that savings, insurance, and pensions, we really need to do a lot more about it. So I'm looking forward to digesting this data from you and downloading it from your website and digesting it because there are intriguing aspects that are really emerging. Obviously, also, you did mention about more payments and traffic, really in terms of digital traffic and payments during the pandemic. But we want to know, we want to be able to interact with the data to see, how many people, who were really excluded. Because when you talk about increase in traffic, increase in payments and use of platforms, this will presuppose that, only existing customers of banks and financial services, would really increase their action or maybe their engagement in interaction with services. But what about people who were completely outside the framework of financial services? By how much did they come into the financial framework during the pandemic? By what percentage did we have gains in bringing people who were completely outside financial systems into the financial system? So these are some of the insights that I basically gleaned from what has been presented.
Thank you, Dr. Paul. Remittances, definitely an interesting perspective, especially in terms of leveraging digital financial services. I'll move on to Mrs. Aisha. Spend a minute, please, to share what stood out for you and what should we be prioritizing going forward. Mrs. Aisha, over to you.
Thank you very much, and good afternoon, everyone. I'm glad to be here representing the Director Payment System Management of the Central Bank of Nigeria, Mr. Musa Itopa Jimo, who is unavoidably absent, and I'm sure you know how high we hold this discussion, but be rest assured that we'll provide the necessary support. And so from the presentation, I think the major catch for me was very insightful, a lot of information and facts to take, but the one that was very, very catchy for me was that if Nigeria focus on the operation of mobile wallets, it will help a great deal in achieving our financial inclusion targets. And I think I agree, and I think the survey conclusion was right on that, which is the reason, as you can see, we have, as a regulator, provided the enabling environment to ensure that the operation of mobile wallet thrive in the banking industry. And with the licensing of the Payment Service Bank, although I can say we're yet, or mainly we're yet to see some level of traction, but because a lot of documentation about the service is still ongoing, and I'm sure as soon as they settle down, and again, refocusing the banks to also give priority to operation of mobile wallets. So prior to now, banks would have to go through the rudiment of licensing, and what the CBN did was to release a circular that banks could offer a wallet operation just like any other service that they do. And so we will see traction, and I'm hopeful that the target of 2030 that was projected in the presentation, we sure would achieve that. before then. It's also important to mention that some of the regulations that were released earlier in the year, and as we continue to work to amend some of the existing regulation to support the financial inclusion drive, was the regulatory sandbox. We actually released a framework on regulatory sandbox in Nigeria, and basically is to ensure that we reduce time to market for innovative products. And as you can see from the presentation, it's very important that we simplify, apart from allowing customers or targeted customers to gain access to financial services, it's also important to simplify this product. And so the regulatory sandbox will provide that enabling environment for the innovator to test this product and quickly before they are put into the market to ensure some adequate level of consumer protection. We also introduced the QR code framework. There was also the introduction or release of regulatory framework for open banking in Nigeria. I'm excited to announce that when it becomes operational, because we're still back-end working on the implementation, this will ensure that consumers are able to take charge of their data. And again, every participant in the industry would know what level of data they can access and ensure a whole lot of consumer protection. So we look forward to working with everyone to ensure that the regulatory environment is it's enabled to make sure that we arrive at our goal and achieve our goal quickly before the new target date. Thank you very much.
No, I'm testing something. I'm testing some audio setting on my.
Sorry. Thank you, Mrs. Aisha. It's good to hear, the acknowledgement around the opportunity for mobile money and opportunities to further opportunities to leverage the power of mobile. I'll move on to Mr. Becker.
Hello. Please.
Hello.
Check me now whether you can hear me from my desktop.
Yes, I can hear you.
Check me. I'm muted and test something. Can you hear me from the phone from my laptop now?
Yes, we can hear.
Becky, please.
Okay, thank you, Jacqueline. Good afternoon, ladies and gentlemen. My name is Becker Nubi from NIBSS. I'm standing in for my Executive Director, Technology and Operations, Dr. Aminu Meida. He would have given whatever it takes to be here, but I mean, circumstances beyond his control necessitated that he be elsewhere, and I had to stand in for him. First of all, let me say a big thank you to Ethina. We always wait for these reports every 2 years, and it helps a lot to take a lot of decisions and even plan. Some of the things, like Jacqueline, you asked, some of the things that stood out for me, very interesting. I was shocked when Ashley presented, and I saw that financial exclusion in the Northwest actually increased by 5.4%, and in the Northeast, it dropped by 4.1% between 2018 and 2020. I would have expected the reverse to be the case, considering current realities. But that also tells us that there is still a lot of work for us to do in the North. Something else that jumped out at me immediately was the fact that 15 to 17 years, young adults, 15 to 17 years, about 30 million of them are all financially excluded, and 77% of that number are in the rural areas. So what are we all doing in Lagos and Abuja? We can't leave it alone to Ronkekuye and Sanep. They are doing a great job. I mean, we have surpassed the 500,000 agent network mark and everything. But the rest of us, what are we all doing in Lagos and Abuja? It also told me that we must continuously innovate around mobile, because these demographics are people that are born on the internet, and who will use the internet if we teach them, and who will use mobile phones. So all our innovation in driving DFS must be around mobile. and there are some things that we are doing around that in needs that I will speak to later. Madam Aisha spoke about some things about QR, open banking. We recently launched our NQR, and it's part of our vision to promote affordable digital financial services and also to drive down the cost of access to these services. So that will suffice for now. In the elaborate sessions, we'll speak more to that. Thank you very much, Jacqueline.
Thank you, Beke. Next, I'll call upon Abubakar, Mr. Abubakar, sorry.
Thank you very much. Thanks for having me, and thanks for a very interesting insight. I think it's become an annual ritual now to wait for the data from Afina and to see what progress we've made. Last year was mixed result. We know the consequences of COVID on many aspects of life. So it was interesting to see that we didn't drop the ball when it came to financial inclusion. I'll make one comment. If you look at the data, it tells us a couple of things. The first one is that there are certain kinds of people in certain demography, in certain geography that tended to be financially excluded. And that if we were to back out that data, for instance, we would see that the data is normalized. And so we need to ask ourselves the question, should we seek to improve this by continuing to push financial inclusion to these places? Or are there some fundamental things that we need to do that are far more important than financial inclusion, or at least will be a necessity or will be necessary to ensure financial inclusion? I think that the more I look at data from people who are trying to do work around gender equality, people who are trying to do work around getting basic infrastructure to the rural communities, people who are trying to include or improve educational access, what I tend to see is that we are not coordinating some of these efforts. And in fact, in some cases, we may be reaching the point where no matter how much effort we put into trying to improve financial inclusion, the benefit does not outweigh the cost of doing it. Either the benefit to those who are trying to include financially, or the benefit to the institutions that are trying to ensure financial inclusion. So we need to be careful that we don't continue to sort of knock on a door that is clearly shut and cannot be opened through financial inclusion alone. That would be one thing that I'll be interested in. At what point of economic exclusion does financial inclusion becomes a luxury that we cannot afford? And we need to get to that point, so we work on it. The second thing that comes to mind for me is to start to look at the data from the perspective of the ecosystems where the financial inclusion infrastructure exists, and yet people are excluded. So for instance, you go to certain communities where the infrastructure exists, the agency network exists, or the access to mobile phone exists, but somehow the actual level of inclusion is very low. And you're not going to solve that problem by throwing more infrastructure at them. You have to really go back and sort of try to understand why those communities and those ecosystems do not have a higher level of financial inclusion. I think that kind of insight is what we hope we can extract from the additional work that has been done, especially the work that is going on in Kaduna State that is more granular and sort of hopefully seek to speak to why even in places where the people have ability to become included, they are somehow excluded. And of course, I can't walk away without speaking to the one comment that I've always repeated wherever I go. The objective of financial inclusion is to create prosperity. On its own, it does nothing for us. We focus on financial inclusion because we think that it's one of the elements for creating inclusiveness, especially economic inclusiveness. But we are getting to the point where we may be taking our eye off the ball because we are equating financial inclusion itself to mean that the actual objective of economic inclusiveness has been achieved. It might help to start to tie the two together so that we are actually focus on the overall objective of financial inclusion. That also helps because there are other agencies and other actors with whom we can coordinate where we see financial inclusion is ahead of economic inclusion, and we can point out to them what they need to do. And obviously we can feed data, we can take data from people who are focused on gender equality, people who are trying to sort of bring rural inclusion and understand how their work can also can enable financial inclusion. And to that extent, what we've done at Sterling Bank is to really think about how our role in the communities where we exist is to unlock the values that is hidden in those communities. And so beyond just getting people into the financial inclusion platform, we are beginning to think about the other things in the communities, such as access to power. So we're working very hard on renewable energy to give access to some communities and see how that can unlock value, such as access to micro lending for educational loans. And so we have gone out to give micro loans in those communities to people who cannot afford to pay school fees, but can pay back on a daily or weekly basis. So it is this understanding that think of financial inclusion as opening the door, but what we do once the door opens is actually far more important than just merely opening the door. And finally, I think that we are spreading ourselves thin, especially those who are non-for-profit and have resources. I think it might help if we concentrate the effort a little bit in the places where we are likely to have the most results, because of two reasons. One is that those results will drive more resources. If people can see that in a village in Sokoto, we put our resources there and we see the improvement, more funders will come on board. And the second reason is that when those communities actually become economically viable, the neighboring communities are likely to then follow through in becoming financially included. I think I will leave it at this point, and end by thanking every single person who contributed to this report. It's a vital report and it's one that I value a lot.
Thank you, Mr. Abubakar, for reminding us it's not just about financial inclusion. What does it mean to the real economy sectors? I'll invite next Mrs. Ronke, your opening remarks.
Good morning. Hello, Jacqueline. Hello, everyone. I think the most interesting part for me, Becky already said it, because I was stunned, to learn about Northeast and Northwest. And I'm not surprised we're thinking along the same line, because we look at the figures together, both NIBS and us. And I'm so happy that at least we've moved the needle a bit in the Northeast. Northwest, has come as a shock. Obviously, we still have a lot to do there. Overall, I think from the data, I think that I have seen the needle move a bit. And I have also seen that the foundation has been laid in terms of, having the number of agents and people actually believing in going to agent locations to perform their banking transactions and for some to open accounts. However, I think now is the time to build on it. Now is the time to make sure that the essence of financial inclusion is actually realized from, bringing up or increasing the number of agents that we have generally. So I think, and we realize that now is the time, the work starts for us. And part of what we need to do, things that we need to do starts with opening of accounts and wallets. I don't know if I should talk about that now, or maybe we'll talk about that later.
Trust me, there's a lot of time. We can talk about that later.
Okay.
Thank you, Mrs. Ronke. Last but not least, Mr. Uzoma Dozier. Apologies, Mr. Uzoma.
Thank you. Thank you. And thanks for that report. Thanks for that rich report. I'm just going to make 6 quick points. The first one is, it's good to see that the numbers have improved despite the very difficult terrain that we've experienced in the last 12 months and more. Second one, from the report, it's clear that that small businesses and infrastructure like the SANEF are going to be very, very key in financial inclusion, because these are value chains that will help propagate inclusion along the line. Third one is education is very, very key. And if we want to move people from cash to cashless and using traditional methods to digital, innovation in education is going to be key. And I believe that we need to, there's a role to play for government, especially in infrastructure, digital infrastructure, to create that digital liquidity. So infrastructure, how will we define what infrastructure is? Knowing that even devices are going to be as important as building roads, because these are access and gateways to inclusion and prosperity. And the fourth one, very interesting, resilience, the topic on resilience. And it means that we need to
Thank you very much, Mr. Uzoma. My first question goes to Dr. Paul and Mrs. Aisha, representing the regulators in the room today. For the fresh insights, financial inclusion has grown by about 1% in the last 2 years. Perhaps it could have been better were it not for COVID, but well, we are at 64%. That's the reality as of now. We still have some catch-up margin to do in terms of addressing the 2020 target of 80%. Are industry stakeholders doing enough to address the financial inclusion challenges in Nigeria? How can regulators and financial service providers better align in terms of accelerating financial inclusion? I'll start off with Dr. Paul, and then we can welcome Mrs. Aisha to respond.
Two questions. You said, are industry stakeholders doing enough to advance financial
Absolutely.
inclusion? And then what can we do from a policy perspective to accelerate it? First of all, the rate 64.1%, obviously, let me start from there, is quite commendable given the extenuating circumstances that COVID thrust us into last year throughout the last months, previous months. So it's been for me personally, I was expecting a negative growth in terms of financial inclusion. But given that we just have 0.9% growth, we moved from 63.2% to 64.1%, which is what your figures, your data is showing at the moment. So it's still something, every little counts, but it isn't really the leapfrogging or the movement or the leverage that we were expecting in terms of really growing the numbers. Basically, as we were talking about 80% as of December 2020, it means that we fell short of the target of 80% by December 2020. And then we need to be looking at really closing that gap, because if we don't do so much at the moment to scale it in a way that is really massive, then we could begin to see people, because we could have negative inclusion. People could fall through the cracks. We could recede from where we are now and move backwards. Now, are industry stakeholders really doing enough? I would say that they are doing what they can at the moment, but whether it is really enough is the question there. When we say industry stakeholders, we need to talk about financial services providers, the people who provide the products and services that individuals who are excluded need to come into, need to buy into, need to uptake. And these products and services, if they are not tailored to the needs of these individuals, they cannot, come on board. Okay, and we're talking about women and youth, and Weke talked about the youths who are basically the digital generation, and they need to, if you don't have a compelling product and service that will target them, then they definitely will not come on board. They will not uptake these products because they are not suited for them. They are not targeted. So therefore, that's where innovation comes in. That's where creativity comes in. If we continually use the same products that we've used for so many years and that we are targeting at people who are already mainstream, who are already banked, products and services that are targeted at high value, high volume individuals, who will continue to exclude the bottom of the ladder. People who are micro in terms of volume, we continue to exclude them. Let's face it. the core competencies of today could become the core rigidities of tomorrow. What is you value today may become a liability for you tomorrow. And so our financial services providers need to look around and innovate and begin to act needs to reach the unreachable, and begin to think about micro, serving the micro segment of our population, of our demographics, and I'm not saying they should forget the big volume, and value individuals, but they should look at the number of populations that we have. 100 million people paying you, 50 million people depositing to you 100 naira will be your risk spread. You spread your risk, and you also, maybe if you use more cost-effective methods, you drive down your cost of reaching them, especially if you go digital. But I know the basic constraint of financial services providers is that these people are hard to reach, and they are also very costly to serve. And it's the same amount of cost that you spend on big individuals, big value individuals, that you will also spend on servicing one individual who is not big value, not big volume. I understand, I get that narrative, but then we need to look at cost-efficient methods of reaching them. From the policy perspective, what can we do? We've been doing quite a lot to unfreeze the space for financial inclusion, like KYC conditionalities, and you've seen what's happening with NIN at the moment. I mean, the Ministry of Communication and Digital Economy basically have driven that particular landscape, and there's a whole lot of uptake, 15 million as we speak in the previous months. And that will go along, if we continue along that path, that will go a long way in helping individuals who do not have the KYC standards or meet the KYC conditionalities to come and obtain financial services and products. And then there are more we can do, especially around women. We have the Access to Finance Framework, which we have just launched in September 29th last year, and that could help reach that segment as well. There's something we're doing on also youth. And even within Central Bank, we have a lot of initiatives and interventions targeted at micro segments, MSMEs. But we aim to create more awareness for people to come on board and assess all of these interventions, and that could help really financially include them. Let me leave it there at the moment for my colleague to come in as well.
Thank you, Dr. Paul. Perhaps Mrs. Aisha, you could, would like to hear from you. How can regulators and financial service providers or the other stakeholders and intermediaries in the sector better align? Because we've had instances of gaps in the clarity in regulations and so on and so forth. What do you think is the best way possible in terms of aligning between regulators and other stakeholders?
Okay, thank you very much. I think one of the panel discussants mentioned this, that a lot of coordination needs to happen. So we're all speaking or working towards the same goal. We have several activities out there, but I think we need to put them together, put a timeline to what we want to achieve by every activity. So we're not rolling out activities and not seeing the achievement. But so far, like Mr. Paul said, we'll commend everyone who has made it happen. Yes, there was marginal growth, but in the face of the security challenges and the COVID-19 pandemic, we know it wasn't easy for everyone world over. So that achievement for us is commendable, and I think we will do more as the economy, as a whole lot has been done to remove the lockdown restriction. At the regulator level, the provision of support to SANEF, I'm sure the SANEF MD CEO spoke to that. We can see a whole lot of agency distribution and adoption of agents' financial touch points. So what we're doing is to ensure that they work in tandem with the banking sector, such that when a consumer visits an agent location,
Hello, Mrs. Aisha. I think we lost her.
you're likely to enjoy the same service. Hello, can you hear me?
We lost you for a few seconds there.
Oh, okay, I'm just trying to say, back to the issue of coordinations. Yes, we have increasing touch point as we see increasing numbers of agents locations, but we need to harmonize the way they provide and offer services to the consumer, especially the target consumers for financial inclusion. The regulation or the regulator, we also, in order to streamline the licensing regime, we release a guideline on new license categorization. And we have seen a large uptake by the number of the license requests that we have received at the CBN. So I think the market is also there for everyone to take. And it's exciting to know that everyone believes that there is so much and the market is also yet to be covered. The promotion of the use of USSD is also very important for us. Yes, there were some major challenges as it relates to commercial disagreements between the banks and the telcos, but with the intervention of the regulator, we saw quick resolution and the service was never taken out at any point. We know that it's also a major channel for financial inclusion. The issue of pricing has also been a topical one for regulator. Yes, we need to balance because Mr. Suleiman mentioned that entities are in for profit, or again, we need to balance the line between cost to serve and also the profit-making motion of private sectors. We agree business for continuity. You need to make money, but again, we encourage that the issue of interoperability and also shared infrastructure in order to reduce cost to serve. And I'm sure the NIPS representative will speak to the major initiative that if properly or formally introduced to the market, we see a whole lot of radical change in terms of reducing price and ensuring that we bring in more people into the financial system space. Then the provision of, like I said, innovative products. It's also very important to know that we cannot continue to offer the same set of products because we say, okay, this is the normal banking product that's available. But we need to consider what is very important for the target market, especially the market that the consumer that we need to bring in on board in order to include them financially. So the regulatory sandbox, we provide avenue for young innovators or even existing entities to test their products. Or you can hear me?
Yes, I can hear you. Apologies, Mrs. Aisha. We have run out of time.
Oh,
I'd
okay,
like
I'm
to
so sorry.
give an opportunity
Yes, okay.
to the rest of the panelists. Sorry.
Oh, so sorry about that. And so basically just to harmonize what we have and consolidate on the existing activities. Thank you.
Thank you. Thank you very much. And thank you for understanding. My next question is to Beke and Uzoma Dozie. From the FinTech 2020, the EFINA 2020 FinTech Landscape Assessment, a lot is happening in the FinTech sector in terms of funding to the tune of over $600 million, as well as, that is in the last 3 years, as well as just a thriving ecosystem with many actors. Despite these increasing activities, there's been very little in terms of pushing financial inclusion, because from what we see, there's a concentration of actors in Lagos, for example, a focus on banked customers, as well as just providing payment and lending solutions to the already banked. Well, in your opinion, what is the role of FinTech for financial inclusion? That is one. And secondly, what needs to be done to catalyze the growth of FinTech for inclusion, especially in terms of improving the DFS infrastructure?
Okay, can I go first?
Yes, you can go. You can go first, then we can have Mr. Uzoma. Thank you.
Okay, I'll go first then. Thank you for that. Without mincing words, FinTech are very intrinsic to the growth of DFS in Nigeria. and we cannot continue to ignore them. We must continue to support fintech, and you can see that the regulators are doing that in everything that all the policies that are being rolled out and things like that. Now in NIMS, I said that earlier in my introductory statement, we have also done some things. One, to ensure to grow financial inclusion, to promote micropayments, and to drive down the cost of access to financial services. Now, in line with the QR framework that was recently released by the CBN, we have released a product into the market, which we call NQR. Now, what that does is, number one is innovation around mobile. Look at what Ashley told us. 30 million Nigerians are financially excluded. They are between the ages of 15 and 17 years, and 43% of them have mobile phones. I'm not even adding the number that are already, they already have mobile phone and have some access to financial inclusion, So that tells you a lot, that is the direction to go. This is the future, So what NQR does is that it reduces the cost of access to financial services, both for the FSP and also for the last mile customer. So for the financial service provider, it eliminates the need for you to invest in hardware, infrastructure, expensive hardware, infrastructure, and all of that. And for me, the payer, it makes it very easy for me to pay for my mobile phone, where, by the way, my lifestyle probably revolves around. There's this popular saying that we say, a lady will forget her phone, forget her bag at home, but will hardly forget her phone. So, and fintechs are doing a lot. Sparkle, for instance, is doing a lot. And we must continue to encourage that. There's something else we must do, which I think I should speak to. In developing our products, we must begin to look at the script of the customer, not at our script. What I have seen happen over the years is that we finish developing the product without validating with the customer, and then we are surprised that the products are not doing as well as we expected. So it should be the other way around. For me, that's putting the cart before the horse. Validate, customer expectation. What does the customer really want? Then develop according to the script of the customer, and then push out this product. Again, I think Dr. Paul spoke to that also. How simple is it for our products to use? Are they dependable? Are they reliable? Do they stand the test of time? Because if I struggle the first time, chances are I will probably not use it anymore, And then we thank God also for MFBs. You call them MFBs, I call a number of them fintechs. If you know what Sparkle is doing, I'll allow my boss, Uzoma, to speak to it more, to say that they've innovated a lot around mobile. And I won't call them an MFB anymore, I'll call them a fintech. And all we can do, all of us, the entire ecosystem, is to support them. But again, we must begin to focus on where the need really is. And while we can continue to play in Lagos, the need is in the Northwest. Ashley just told us that, financial inclusion is dropping. So what do we need to do there? We all need to mobilize and deploy to the Northwest, not leaving out the Northeast and the North Central. That 30 million, how do we get them into the net? How do we provide affordable services to them? We've also simplified BVN enrollment. Now you can do it on your mobile phone. Agents, SANEF agents can do it on their mobile phone. We released the Android BVN enrollment SDK. That also speaks to reducing costs of having to buy a laptop and the peripherals that go with it. I do not want to monopolize the floor. Let me just stop here and let Uzoma speak more to this. Thank you very much.
Thank you.
Thank you. Thank you for making my remark very much simpler. But to your question about why fintechs are gravitated around places like Lagos, it's the first obvious point is infrastructure. Lagos, infrastructure in terms of digital infrastructure, internet availability. The second one is income levels as well, because first of all, you need a device. So devices are required for a smartphone for you to access to really leverage digital, and then also the awareness and education. The education levels in the urban areas are much higher than in other parts like the Northwest. So so clearly it is not just fintech, it's also all the different stakeholders partnering together to create an enabling environment for fintechs to actually reach out to other parts of Nigeria. If there was digital infrastructure in urban and rural areas in Nigeria, I can assure you fintech will be delivering services there. Second one is fintechs need to actually partner with traditional infrastructure. And so traditional infrastructure is banks and also agencies like, platforms like SANEF as well, because we're trying to move people from a traditional way of banking, of doing their financial activities to a much better one. And so there needs to be a transition, and that's why there clearly has to be, fintech can't do it by themselves, neither could traditional institutions. So you need the marriage. And the third part is also using existing infrastructure like small businesses. Small businesses already, there are a lot of small businesses that are actually playing a role in inclusion because they employ people. So you have a mass affluent who's driving a business, and as you can see from the report, a lot of people want to start a business. And so if you can actually drive, that education, that awareness, and that resource allocation to those segments and make them sustainable, then from your report, 49 million businesses are employing 33 million people. That's just under 1% per business. Imagine if they can employ, if those 49 million businesses can employ one more person, that means that will double employment. That means that would be a business now actually bringing another individual into the financial inclusion net. And so there's no silver bullet, but it's definitely all stakeholders playing together to achieve a bigger role to increase the market in which that we play. And that would be my feedback on that.
Thank you very much, Uzoma. If you may, I'd like you to maybe just elaborate when you say enabling environment for fintech, what exactly, assuming you had the opportunity to do the ask, what is your ask in terms of the enabling environment?
My enabling environment would be really and truly, make device and make, first of all, identity is very, very key. So I really, I think like the National Identity Program should actually, be aggressively followed, because once you know who's in your ecosystem, then the need for documentation does not arise. Because, for example, if I'm a criminal, the last place I'm going to go to is to my house. But every time you do a transaction, I can actually pinpoint where you are. So that is one. So inclusion is very, very, very clear. And then you also need to change some legislation, because we have legislation that does not allow us to use leverage on digital. So those are my two asks. And the third one is, make digital infrastructure available across Nigeria so that we don't even have to rely on USSD, because USSD has a limitation because financial inclusion is also requires education, and you get better education from a smartphone than a dumb phone.
Thank you.
All right, Jacqueline, thanks. No, I'm not cutting you off. Just to put you on alert. We still have two other presentations coming up. I don't know why Becky is laughing. He knows that this is what I do. So Jacqueline, we just have to wrap up this session right about now, but go ahead. I'm going to let you come to a conclusion. Thanks.
Thank you. I was going to make noise if you are not going to allow me to move forward, Stephen. But anyway, thanks. Mrs. Ronke, we've seen significant growth in agent networks thanks to stakeholders, including SANEF, that has been at the core of this growth. How can we build on the recent significant growth in agent networks to drive the penetration of financial services in rural areas? What are our plans, between SANEF and PSBs, or between, SANEF and the fintech in the future, especially now that we have attained the numbers?
Okay, thank you, Jacqueline. I'm just going to say this sort of very quickly for time. As you well know, it's been mentioned severally that we met our target collectively. And when I say we, what I mean is SANEF and our partners. Our partners are the super agents, the mobile money operators, banks, CBN, and all our other stakeholders. So far, and our agents, importantly as well. So far, we have about, we did close at 561,000 last year, at the end of 2020, instead of the 500,000. And today, we're at round at about 730,000 agents. So, like I said, having done that, we have a lot of work to do. And I'll just tell you some of the things that we need to do and that we're also working on collectively with our partners. Number one is to open accounts and the wallets. It's the starting point. You really can't expect financial inclusion if you don't even have, if they don't know you financially. You cannot be financially included. So it's very key to either have a bank account or a wallet. With this, you'd be able to get either social payments, credits, loans, insurance premiums, pensions and things like that. That's the starting point. And we're really working hard towards that with our partners, with the super agents and the agents. What we've done so far is that accounts can be opened at any, at all the agent locations. So accounts for any bank can be opened at all the agent locations everywhere in Nigeria. Also, increasing the number of products available is very key as well. Today, we have cash in, cash out transfers. We feel that it's important for us to have collections for non-bankers, for non-banking institutions. There should be ability to collect premiums for insurance. There should be ability for social disbursements at the agent locations. We should also have repayments of loans happening there. Bank card collections should happen, dispute resolutions, and there's so many other things that we can build upon and to happen, products available at the agent locations. It's also very key to have efficient technology. All these things will have to ride on technology. So it is very key for us to have that. Financial literacy is also very, very key. Right now, we're working with GIZ and CBN for our e-learning platform, which we're about to launch. That again, that's for the agents, and that's for the agents to use as well. Collaboration is very key, as has been said already earlier on. It's very, very key that we continue to collaborate. It's very key that the banks know that these agents are their agents. Therefore, products that are in their banking halls can be extended to that place. It's very key that they tell, they make it known out there that you can go to any of the SANEF locations to open your accounts. We have 730,000 agents round about every corner in Nigeria, all the 6 geopolitical zones. So it's very key for them to know that products are available there. It's very key for them to know that accounts can be opened there. And also to work with super agents. Banks and super agents need to work together to be able to achieve what we need to do, the financial inclusion. Like I said, collaboration is key. Our CBN will continue to make the environment, make it environmentally friendly. Also, NIBS, the super agents, MMOs, like I said, and all our international partners like EFINA, GIZ, we all need to do it together. And most importantly, is the sustainability of the agent banking business. If the agents fall by the wayside, then we don't have the extension of the banks or bank branches that we have out there. So, in a nutshell, that's really what we're working on now and how we need to build on the next phase to actually get the financial inclusion targets that we need. Thank you.
Thank you, Mrs. Ronke. Finally, Mr. Abubakar, I know you had mentioned that what Sterling Bank was doing to identify the use cases within the local communities. What do you think we should do in terms of improving inclusion in the northern Nigeria?
Thank you very much. I think it's clear to everyone that the more rural the community is, the less excluded. So that much is clear. So, and what we need to start to ask ourselves is some of the infrastructure that exists in the urban areas, how do we begin to extend those infrastructure to the rural areas? That is one thing that we may not be able to do as financial institutions, but I think our partners should begin to think about that carefully. And this could be basic things like getting more power into locations, right? Just basic small community power projects that can, put the community that can light off-grid communities. The second thing that comes to mind, and this is really important, is for us to think about how we educate people in the rural areas. And this is not just about the children out of school. This is actually about the parents themselves, the adult who needs to be financially included. I think that the idea of focusing all our effort at education on the children who are absolutely very critical for our future. I'm forgetting that there are people today who are no longer of school age, but actually still urgently required to be educated in the basic, just the reading and writing. I think that's become even more important. Not just because that would help us with the economic and financial inclusion, but it is because that is also the shortcut to ensure that the children themselves are educated. A mother who can read and write is far more likely to put in that extra effort to make sure that the children are educated. So I think that when it comes to the northern part of the country, and when it specifically comes to women, let us begin to think about how we put basic infrastructure that brings them into what we'll call the modern society. There's just access to a little bit of power. Obviously, those who do not have access to mobile phone, let's just think about how we start to make this available to them on a communal level and eventually as individuals. And then let us think about how we start to provide access to basic form of education so that they start to understand basic stuff and obviously start to use the technology available. That said, I still think that we need to be careful not to conflate the demand side issues with the supply side issues. A lot of us here are equipped to deal with the supply side issues, what we can do to get agents into communities or to make banking services available. But there are real issues that are on the demand side that may actually be outside our control or what we can help with, but we cannot do it alone. And we need to solve those demand side issues. We need to give people a reason to actually be interested in getting on board. And that then goes into the realm of incentives. What are the incentives today that we can put in place so that people who are financially included are clearly better off than those who are excluded, thereby giving people the motivation to make the extra effort to become included? I believe that about half of those that are financially excluded today, with the right incentives, can actually self-include, that they are not so far from the infrastructure for financial inclusion that they couldn't make the extra effort to become included. For instance, all of those who were just onboarded onto the NIN are people who without motivation would never have gotten onto the NIN. We need to find those kind of incentive and motivation so that a lot of people will come on board. And lastly, and I think this is what Uzoma has spoken about, this is what Becky has spoken about, we need to continue to reduce the obstacle to serve. Right? The price to serve is a function of the obstacle to serve. And I don't think that regulators should be so focused on price regulation. They should be more focused on removing obstacle to serve. I can tell everyone for free that if we had regulated the price of SIM cards 20 years ago to 500 Naira, we would never have had the investment that came into the telecom that then ensured that we can give our SIM cards for free. So sometimes focusing on the price is focusing on the wrong thing. As you remove the incentives and you increase the reward, there will be a lot more investment and eventually we'll achieve the price regime that is fair for the product. So yes, we do have work to do. It is across board. There are general issues around the market, but specific to the North, I think we should all put our effort, even if sort of declare a year where we focus on women in rural areas in the most excluded regions and see the impact that that can deliver.
Thank you, Mr. Abubakar. Thank you, ladies and gentlemen, for this fantastic session. There's more that we can talk about, but unfortunately we have to stop here. Thank you, thank you, thank you. I'd just like to give a parting shot in very simple sentences, just reminding us what we have spoken about in this session. That we need to gain agility to evolve with times, to innovate for financial inclusion, coordination in terms of actions, defining the specific actions that we need to do, as well as timelines, validating the needs and customer expectations, ensuring that we have an enabling environment for fintech, efficiency in technology. We have about 730,000 agents. What should we do with these agents? There's lots of work to do. Education in the North, also critical. And then lastly, as identified by Mr. Abubakar, the need to identify the obstacles to serve. Very quickly, I think I've just summarized what we have all spoken about. Once again, we'd like to express thank you to our panelists, and I'll end this session by handing it over to Mr. Stephen. Thank you.
Thank you very much, Jack. I mean, I know this was a very tough one. It's been tough for, for a lot of us. That's some of the challenges that you have with this kinds of presentation, which is virtual. I want to say a big thank you to your panelists as well. But without taking too much of our time, I'm going to be introducing Dr. Isaka Olarewaju, the former director, National Bureau of Statistics, to make his presentation. Because he is obviously going to have to help us understand exactly what the learned lessons were. Over to you, Dr. Olarewaju.
Thank you very much. Sorry for presenting this one at the rear end rather than at the beginning. I think I'm being heard now.
Yes, you can hear me. I can hear you clearly, sir. Thank God.
Okay, very good. Please, yes, like
I've been helping you with the slides. You just go ahead.
Okay, so we can just move in quickly to the next slide, as it is a sample design and data collection presentation. And as it is seen, the sample design was actually done by the National Bureau of Statistics, and it was designed to have equal representation from each of the 36 states and the Federal Capital Territory. In each state, it was a sample of 750 households, which was designed to and allow for statistical robust headline indicator of financial access, and the estimate is expected to be provided at national, regional, I mean, where the 6 geopolitical zone of the country, each of them has their own estimate, and there are estimates at each state and that of Federal Capital Territory. The next slide talks about the coverage itself, which we have already said that since we want to have estimates at the national level, therefore all the nook and cranny of Nigeria has to be covered. That is, the enumeration area, which we call primary sampling unit, was selected randomly from each of the states, and it is representing the spread of the country. And in all, the survey achieved 99% coverage at the household level, and this was what we are happy at, because it was again slightly higher than that of 2018, the immediate previous one. But there was a slight experiment on Kaduna State, where we have to jack up the sample size to test some indicators, particularly among the teenagers. There are some indicators that has to be tested. Though this is not part of this report, but it was an experiment which may be used in future. The household listening data was conducted in November, and between November and February 2021 by research firm Ipsos, which I spoken earlier, and the supervision was only done by the National Bureau of Statistics. As usual, the questionnaire, the instrument for data collection, was actually prepared in English language, but has to be translated to the 3 major languages in Nigeria and the Pidgin English to allow for a good response from those who might not be able to understand English, and rather than allowing the enumerators to do the translation themselves, the questionnaire was translated to those various languages. The result was the result of the survey for each state were weighted into the adult population of Nigeria, because the target population actually was adult population that age 18 years and above. And the results were benchmarked to the national population estimate for verification. What we mean by this, that the result of this survey does not contradict the distribution and structure of the population of the country. But we have some challenges during the data collection. We are all aware of the issue of banditry, kidnapping, and insurgencies, particularly in the northeastern zone of the country. That actually delayed, that actually did not allow us to cover some part of the enumeration area originally sample. We have to drop them and substitute it. Another kind of challenge we have, next slide, is the COVID-19 lockdown. At a particular time in the country, there was total lockdown. Interstate travel were banned, and then people could not, move as expected. Therefore, we have to stop the data collection temporarily, and the data collection had to commence after the restriction order has been lifted. The last but not the least among the challenge was the issue of NSAS protest, which which also affected movement, and some respondents were even afraid to be visited by any visitor or anybody. For that reason, the effect also affect the timeline of the data collection. The data collection may have been concluded earlier than when it was concluded. Those are the challenges we have and the experience we have done in the data collection. But in all, it was a nice experience. I want to thank you for listening.
All right, thank you so very much, sir. I mean, this is quite an impressive one. I can imagine some of those challenges that you actually faced in trying to ensure that a lot of those data, the raw data themselves are actually, gathered and then analyzed. We're glad that you were able to have this presentation. Our next speaker is the Commissioner for Insurance, National Insurance Commission, NICOM, and that's in the person of Mr. Thomas Olorundare Sunday, pardon me, is the one who apparently we've looked at the aspect of one of the questions with regards to how much of the insurance story and index is one that we are talking about. Is this something that we obviously have to be so much excited about that we know it's been done? Because at this A2F 2020 survey report, we've obviously realized that some of these things have to come to stay. And so we'd like to hear, especially from your own angle, in terms of being the second keynote address that you're giving to us, Honorable Commissioner for Insurance. Over to you, sir.
Yeah, thank you so much, Ashley and the entire team. So grateful. A lot has been done. I must acknowledge the leadership of the central bank with respect to financial inclusion issues. To a large extent, FINA has been a driving force towards getting the relevant conducive environment, providing through their survey, providing the relevant information by way of data, which has remained very helpful, and of course also through quite challenging in terms of targets and the rest of them. From the insurance perspective, and also from the regulatory perspective, I think we are more concerned about the supply side than the demand side. The supply side in the sense that as the regulator, we try to create that enabling environment. Before now, you remember that a guideline was issued to ensure that the supply side, and by this I mean the operators, have a working arrangement where they can provide what is needed for the populace. We have improved on that. Hitherto, we only work with standalone microinsurance companies. But sometimes early this year, we thought it necessary to open the windows so that the conventional can as well also transact the micro, so that it will be all inclusive. Of course, they have the culture and they have the platform within which to do this. So they are encouraged to do that. We are on them, trying to persuade them, and so that they can see the business side of microinsurance. Of course, we are also concerned about the product offerings, which should meet the demand of the populace. The products are coming. Of course, we've had a lot of assistance also from FINA in helping the underwriters to develop appropriate products that will meet the demands and the needs of the populace. The market is there. It's just for us as operators to assess this market, and for us as regulators, create that enabling environment that will allow the operators to be able to provide the needed support. Of course, the payment system, there has been a lot of improvement over time with respect to the payment system. And of course, I listened to Ronke when she was discussing about the various platforms for harnessing reaching out to the populace. And I think a lot has to be done in the insurance sector so that payment for these, for the services rendered, can be harnessed as quickly and with minimum fraud. Of course, the issue of technology is very critical, and a guideline to that effect has been issued to our operators as to how to deploy technology in spreading their products across the potential clients. That's also we are doing. There is so much to be done. If you look at our level of penetration, which is far below the potential, what it's telling us is that the market is wide there, and that we have to stop at nothing to be able to reach the unreached. It is critical. The partnership that we have enjoyed from the different persons is key. And all these initiatives by the different institutions, we definitely need the back end of insurance to be able to support for sustainability of those initiatives. I want to thank you for the opportunity given us to participate in this program. Access to insurance is critical to deepening the market, and that we are determined to support as much as possible. Thank you very much.
All right, thank you so very much, sir. It's a good one for us to hear from you, because it's important that you've actually highlighted the fact that the challenge here is in the supply, not necessarily on the demand. And I know that NICOM is doing so much in terms of initiatives and policies, and we're glad that you are here to actually give the second keynote address at this A2F 2020, which is Finance Access to Financial Services in Nigeria 2020 Survey Report as a case. I want to say a big thank you, sir. And then we hope in the future we can also have your presence as always. And this is a relationship that cuts across all of these sectors, because insurance is one of those products or services that needs to be on a very, very geometric adoption so that we can have more people insured in the country. Thank you very much, Honorable Commissioner, and we look forward to seeing you again.
Thank you very much.
All right, ladies and gentlemen, the time is fast spent. Apparently, I know these things happen because of one or two challenges here and there, and that's because we are alive. When you have life, you always have challenges. It's how you're able to overcome them that matters. But nevertheless, we are going to be going to our next speaker, who is going to be the closing remark, and that's going to be taken by Gail Waranda. She's the Economic Development Team Leader here in Nigeria for the UK Foreign, Commonwealth and Development Office. Over to you, Gail.
Good afternoon, everybody, and great that so many of you have stayed with us for this interesting analysis. FCDO, in its former guise as DFID, Department for International Development, has prioritized financial inclusion for a long time. And we still think it's important. We committed at the 2015 Addis Ababa conference, along with 192 other countries, to target that we'd all work for on financial inclusion. And what we've heard today is that Nigeria's missing its target, but most importantly, what we've also heard is that there's a way to still get there. And I think that's what's so interesting about this report, which is we've not only got some very rich data for not just policy advisors, but also fintechs and banks to analyze and take time over and use, but we've also got some suggestions on a way forward. And that's what I want to pick up on briefly in these closing remarks. I think it's really important that we're revved up and energized to push this and to use our advocacy and our enthusiasm for the sector to take this forward. And I wanted to pick up on a couple of things from the panel session, which is somebody asked, you know, should we reduce our work on financial inclusion because the problems in Nigeria are so deep and inherent related to poverty? And actually, we asking almost kind of for the impossible. I think it was a brilliant question. Are we asking for financial inclusion from people who are just too poor? And I see here a really important aspect, which is the way we look at financial inclusion, and I think the way we all should look at financial inclusion, is not as a piece of work on its own, but as a root and an interrelationship with a lot of the sustainable development goals. So for example, when we're talking about the conflict in the Northeast and working with internally displaced persons, there's a wonderful way of rolling out more mobile money and digital cash transfers in a way which makes the work with those IDPs more efficient and of building markets around money and cash. Similarly, in our work on agriculture, it's absolutely essential that the farmers, as shown in the report, to have very limited financial access, are able to buy their fertilizer without having to leave their farm. They can actually make their payment remotely. We've got some great fintechs working in the agri space, and they're important. But I also see, as part of the Vice President's Economic Sustainability Plan, great synergies with pay-as-you-go for energy access, and also the power sector recovery plan. The use of smart meters really needs pay-as-you-go mechanisms. Irrigation for agriculture on a pay-go mechanism. The more inventions we see, the more important financial inclusion is. And it's financial inclusion for these purposes that's what I'm interested in. It's there as a means to lift people out of poverty, not as a means in and of itself. And I think it's really important to find those synergies. So I think I want to sort of emphasize that. And then finally, because I know you're probably all keen to move on to your other things, but I wanted to close on, you know, if there is a silver bullet, if there is a game changer here, it is mobile money. Mobile money doesn't need the internet. It doesn't need a smartphone. It just needs a phone. And great that we've heard that lots of people have those mobile phones. Even the young people have the mobile phones. And we need to look at the neighbors, which Ashley ably presented in her slides. So what we've seen is within just a couple of years, Ghana has got its financial inclusion rates up to 80% through mobile money. It is an amazing piece of technology. It reduces the cost of so many things. We were talking to some energy providers yesterday who said that they reckon that the cost of mini grids here is probably 20% more because of the absence of mobile money at scale. So there's a lot here that we can all do. We can help those mobile money providers scale up who are already here, and then we can push for additional licenses. We can also push for KYC. I was really struck by that rump of people, that difficult group of people for the banks to reach because they don't have the KYC documents. So there's lots for us to do. We're going to be very busy, and I know that you're all hanging on to this call because you're passionate about the area, and I think everybody has a role to play here. Banks, sterling work by sterling, if I can say so, up in the Northeast and the North, really reaching the people that the other banks don't reach, if I can say so. But there's a role for banks, there's a role for fintechs, there's a role for mobile money, there's a role for policymakers, and there's a role for state governments here too. I think more payments through governments, through the financial systems, more encouragement of people to sign up, and there's a role for the federation. So we're all going to be very busy, but we're first going to be very busy reading this brilliant report. So thank you very much, and let's stay in touch, and best of luck with it all. Over.
Thank you very much, Gail. On that note, that this is going to be a wrap up because I'd already made a promise that we're going to wrap up within the time allotted. But you and I know how this happens. This very particular presentation is very important. We're glad we still had a presentation from National Bureau of Statistics as well as the Commissioner for Insurance. We couldn't leave without having them. So I would like to please ask for your pardon. But nevertheless, in my own opinion, this has been a wonderful, wonderful engagement. The 2021 edition of the EFINA Access to Financial Services in Nigeria 2020 survey has been a wonderful one. And I know that all of this report will be made available to every single one of us. And the job is going to definitely be ongoing. I want to say a big thank you to the chairman, of course, to the deputy governor as well as Dr. Olarewaju, and of course, the EFINA team, as well as the commissioner and all of our panelists. You made this quite a very robust and very engaging section. And certainly to you, Jacqueline, for making this a wonderful moment for me. And above all, to every single one of you out there who joined us and you're still with us even till this time. I want to say a big thank you. My name remains Stephen Ipalabo Lawson. It's been a wonderful opportunity. Until I see your way again, by the grace of God, we should be looking forward to 2022. Bye-bye for now.
Bye-bye.
Bye-bye, Stephen.
Bye-bye. Thank you very much.
Bye-bye, colleagues.
Thanks.
Bye-bye, everybody.
Bye-bye. Thank you.